Welcome back to the channel, everybody, and thank you for dialing in on this beautiful Sunday for a little market overview and see where the pain points are, because obviously currently we're going through quite a lot. And so I just wanted to go through what's happening with the markets, what are some of the impetus of why we going the direction where we're going, and give you a bit of my thoughts, and at the end open to some Q&A. So if you have any questions, please pop them down in the comment box. I'm happy to answer as many as I can at the end of it. So yeah, let's dive right in. I mean, because obviously it still looks very much gruesome out there. I mean, it's getting worse and worse by the week, it seems. Looking at the Vanguard S&P 500, I mean, we are down for the year by, we are now about 18% down. I mean, that's big drop in the market, right? We're not talking about an individual stock, but entire 500 biggest companies in America. So that's really something we're really seeing and feeling the pain across the board, especially index funds and so on, where people invest to have a stable return over time, right? You invest in index not to have an exponential growth, but a stable growth over time. So seeing this happening to your portfolio is certainly something that takes a lot of pain. But then again, it's something every good investor has to learn to get through and deal with it, right? Especially we see, of course, the growth stocks being impacted. Some other stocks like energy stocks and so on, some of them are actually doing sort of quite good because of the pricing, etc., and various reasons. But especially the growth stocks, which previously have been the biggest drivers of the S&P 500, the Apples, the Googles, etc., and they are suffering the biggest at the moment, and we'll come to that in a second. Now, when we see what is the main driver for that, one of the biggest drivers is certainly inflation, and depending on whatever country you live in the world, it might be more or less than in the US, where it came in last week with 8.6% in May, which is the highest since 1981. So that's a huge number, which we haven't seen for forever. I mean, normally you would aim anywhere between 2 to 3%. So depending on where you live in the world, it might be even higher. I believe in Turkey I've seen up to 75% inflation, which is, I mean, just incredible. Where I live in wonderful Lithuania, we're having around 15-16% inflation. So it really depends on where you live, and obviously geography impacts certain factors like energy prices and so on, but that's tremendously high. And interestingly enough, they also measure now more and more, you read about core inflation. Core inflation is a little bit less because basically, as you can see over here, it excludes food and energy. Which is often some of the biggest expenses anyone would have, right? The normal working class, that's what they spend their money on. Fuel, energy for the house, and food. So that rose by 6% if you take those things out. So including that, food, gas, energy prices, that rose by 106% year over year. I mean, that's incredible growth. In a bad way, obviously. We want this number to be as low as possible, and hopefully that will reset, because actually analysts thought it would come at 8.3 and it came in at 8.6. So that being higher than expected, again, gave a shock to the markets, and we can feel this immediately, and that's really bad, and we need less of that. Interestingly enough, I mean, I'm based in Europe, obviously, and recently the ECB, a European Central Bank, they also came out with their findings of inflation and their counter plan, and that was to increase, obviously, the rate, the interest rates for Europe. And it kind of changed a little bit the impact, but funnily enough, in these times everybody looks to the US, what the Fed is doing, and that's the big driver here. And now with this inflation data being higher than expected, what will happen next week? We are going to be seeing the Fed coming out with their new interest rates, and again, people of course already know that they're going to increase the rate, but it might be, in the past it was between 0.25% to 0.5. Some analysts are even saying it might be all the way to 0.75 or 75 basis points. So that would be quite the increase, just another month after the previous one. And again, that will have quite a detrimental impact on overall business landscape. I mean, yes, it will lead to hopefully lower inflation numbers, because borrowing gets more expensive, right? So people invest less, people buy less property, because it's getting more expensive to take a mortgage, to take a loan. You're going to have to pay it back a higher interest. And on the other hand, you're going to get more interest, technically risk-free, if you leave your money at the bank. Now, you know me, I'm against keeping money at the bank, but in times like this, people are quite tempted. You know, the higher the interest rate gets, and at the same time, the more expensive the borrowing gets, people are less willing to invest and make large purchases. Big companies like Apple, Google, etc., you know, they're gonna have less liquidity that they can borrow to use for R&D, etc. So that will definitely slow down the economy. I mean, just imagine the extreme. If they would be increasing by 5%, it would really come to not a halt, but a huge reduction in overall business sort of turnover and activity. So I think that's, you know, hopefully it will bring down inflation without crippling economic progress, because that would be definitely detrimental. So it remains to be seen, but the fact is that most people already assume that there will be an increase. The question is how much. Now, when we look at some of the big growth stocks that have been driving in the past, the S&P 500, I mean, look at Tesla, down almost 42% since the beginning of the year. I mean, that is unbelievable. You know, I mean, you can see now the short interest also increasing. So that's people betting against Tesla. So that's now at 3.2%. But traditionally, people have always taken quite a strong stance against the company. Still, I think if you're a long-term bull in Tesla, especially now that they filed, as you can see here, for a 3-to-1 stock split. So what that means basically, you would be getting the share price, which is currently hovering around the $700 mark. So that would be divided by 3. So what would be 200 something. But at the same time, if you own 1 share, let's say, you would get 3 shares. So basically the dollar amount would be cheaper, but you would get higher quantity. So in total holding, the market cap would remain the same. It's just lowering the price tag that people say. And yeah, for new beginners, they see, oh wow, it's now much cheaper, I will buy it, even though actually the total price for the company valuation never changed. But since a lot of companies have done that, traditionally the stock increases because usually retail investors get attracted by it. And as soon as that stock split happens, people buy more. That's the belief. But again, as we are now in uncharted territory with such high inflation, the question is how much discretionary money people have lying around to pump into Tesla. It was different in 2021 when, you know, people were at home, you got stimulus check that you didn't know what to do because you couldn't go anywhere to spend it. So now, being in that situation, I wonder how much that would have an impact for retail investors to actually pump into Tesla or other growth stocks potentially. So yeah, that remains to be seen. The same here with Google and Alphabet. I mean, quite down 23%. I mean, such a strong, solid company like Google. It's quite a surprise, I must say. At the same time, I'm really a long-term bull on Google. So for me, I've definitely picked up a few more stocks. I buy fractional shares because you can see here, I mean, 1 share is $2,200. So it's not that I buy just casually 1 share. So I buy, you know, in fraction, which you can on Interactive Brokers and many other platforms. But for me, long-term, when you still look at the 5-year, I mean, it's still a growth of 133%. So long-term, I just can't imagine that Google is going to go anywhere else but up. Then, of course, I still believe it's the biggest company if they've not been overtaken by Aramco, which is the Saudi oil giant. I think actually they're now bigger, but the biggest sort of Western company is Apple, now with the market cap of 2.3 trillion. They used to be the first company that hit 3 trillion. So now obviously with the price coming down, as you can see, they dropped by even higher percentage than Google, by almost 25% since the beginning of the year. And sadly, I did actually buy at the beginning of the year, so I felt the drop very much looking into my portfolio. But nonetheless, again, same story here. Over the 5-year term, it's a growth of 270%. So long term, I just think it is a steal. So that's why the title of the video, I really think now it's an amazing opportunity to pick up some of the stocks on the cheap, so to say. Will it drop further? Quite possibly. If inflation doesn't come in line with what we've been expecting or what the market's been expecting, it might go down further. But I think companies like Apple, Google, etc., companies that we want to own anyways, I think now is a fantastic time to own them. Another great thing for Apple that they've recently came out with at their latest developers conference, just ahead of the launch of the new phones, which hopefully will be launched soon, and I suppose we will see a sort of increase in the price for the stocks, because that's going to be another boost depending on how good the phones are going to be. But one big thing they're going to come up with is the buy now, pay later model. So they already have Apple Pay, which, you know, pretty much anyone with an iPhone uses, so they have all the data on all of us, even though they anonymize and so on, so they're very particular about the privacy of the user. But using that, they can basically offer the option of buying now and paying later, which is a hugely successful model. Now personally, and I've recently done a poll on it, most of you are the same, I'm not using that model, and I don't know too many people who do, and I always advocate against buying something that you can't afford right now and paying it in installments. But apparently that use is the new trend, and maybe it's the young generation, I don't know, they like to do these things. Personally, if I can't own something right now, I don't have the money, I'm not going to buy it unless it's a house where I'm going to finance it. Even a car I would only buy if I have the money. But anyway, it is a huge model, and you see companies like Affirm and the Klarna that is about, it's from Europe, they're about to IPO. Well, now it's a little bit delayed, but in general, they have huge valuations behind them. So I think that could be adding a big revenue and potentially profit part to Apple's bottom line. So I think it's going to be an interesting model to watch once it starts rolling out. But yeah, I think another driver for Apple to potentially reach the 4 trillion in the future once the markets recover. Now, looking ahead at crypto, the situation looks probably even worse than in the stocks. I mean, it's just basically red across the board. I mean, it looks absolutely brutal out there. As you can see here, pretty much everything is down. I mean, there might be a couple of coins here and there, but even if you see the 7-day chart, I mean, Bitcoin is down, Ethereum down 16%. So there's a lot of now discussions about the upgrade for Ethereum from proof of work to proof of stake model, which is supposed to happen in August. So there are now a lot of question marks coming. Can they stick to the deadline, to the date, and what will be the outcome, etc. So a lot of uncertainty in the market, plus the times we're in, so remains to be seen. Yeah, very, very interesting. Bitcoin in general, I mean, has been just trending sideways for the last, I don't know, it feels like a year. As you can see here, we pretty much where we used to be a year ago, we're back to the same price, and it just kind of moves up and down. So for traders, it's really good times because you can really have small positions move in and out of the market, and that's why actually I'm thinking to try some kind of trading bots like Pionex, etc., that really capitalize on these little micro swings in the market, because other than that, it's going to be tough to make really any returns in this market, except for, of course, staking. And I'll speak in a second. That's still my favorite model of making cash flow in those difficult times. Even though the prices are dropping, I'm going to get paid daily cash flow and interest income from staking rewards. But yeah, I mean, it looks really, really tough. Now, as you know, I'm a big fan of Nexo platform, and they also have the Nexo token, which also has taken real deep dive in the last a few weeks and months actually, since the all-time high. I believe it was somewhere around over 280. I bought in around the $2 mark. I mean, we're now less than a euro. I mean, that's really, really painful. So obviously, in general, altcoins are usually even more volatile than the established coins like Bitcoin and Ethereum. So that's why I don't have too many altcoin positions, and I'm not planning to add any future. Again, my biggest position in crypto is and remains Bitcoin. I have a bit of Ethereum, and my other altcoin position is Nexo, just in order to get higher staking rewards on my Bitcoin and better benefits with my Nexo card, etc. So that's my most speculative position, I would say. But other than that, I'm gonna stick with Bitcoin. And I don't seem to be the only one. If I go back over here, you see actually the market dominance, if I zoom in over here, of Bitcoin is now 47%. So of all the entire cryptocurrencies out there, if you add up the price times shares, currently we're sitting at a market cap of around 1 trillion euros. I mean, we used to be over 3 trillion, so you can really see how the markets came down. It's really painful to see, but nonetheless, I mean, we are where we are. But of that 1 trillion, 47%, so around 470 billion consists of Bitcoin. So all those coins that went down, the drain or disappeared, people taking that money and putting it into the safe haven, which is Bitcoin, right? So the more volatile the times, the better it is for Bitcoin. And I think that's gonna probably only increase. I mean, the more volatile it gets, I think that number might potentially get over 50%, which I think once again is a bullish case for Bitcoin, that this is sort of a store of value because people trust it much more than many of the other cryptocurrencies out there. Now, one last point on Nexo is, sadly, just like Crypto.com came out a couple of weeks ago, Also, Nexo now came out with an email last week actually, informing that from July there will be changes to their staking program. And I really like that they give this advance notice, because Crypto.com said it's effective now and you had no choice to kind of move your funds, etc. around. Here you actually have time, and I will make a video on this next week to kind of deep dive on what these changes mean for us as investors and if it's time to move or not. And just a side note, no, it's not time to move. It's a small adjustment. It's very understandable in these markets. But again, I'll make a separate video on this to run you through this. And yeah, I think we just have to understand that in those times we're in, everybody's suffering. So, something's got to give, right? And as the market rebounds and returns to, previous all-time highs, those offers gonna come back again as we used to see them in the past. So yeah, I mean, guys, what can I say? It is definitely rough waters out there. It continues to do so. I personally think that next week, I think the Fed may increase actually higher than the previous time, which is 75 basis point. So that might freak out the markets once again. And I think stocks, S&P 500, cryptos, all gonna nosedive even more. Honestly, I wouldn't be surprised if we see Bitcoin less than 20,000 euros. I mean, I would hate it to see it, because already I'm down, I believe, more than 25k euros in all my portfolio, which is really a pain, because right now, as I alluded to in my last video, I'm actually planning to buy a house. So I need quite a bit of money for my down payment for the mortgage. And yeah, most of the money is tied up in my investments. So now I'm really investing actually a little bit less than I would want to, because I still think it's a great time to buy and sort of dollar cost average yourself into the market, which I'm always an advocate for. But yeah, right now I really need cash to make this initial down payment for my mortgage. So sadly, I'll invest a little bit less. Nonetheless, I will still continue to buy weekly, just in smaller amounts, but I want to benefit from those falling rates. And yeah, they might be falling for a little bit longer than we would like to, but that's investing, and that's part of it. And in the long term, I think those who weather the storm will benefit from it without a doubt. Right, that's pretty much it. I will answer a couple of questions. Philip, so great to see you. Thank you for joining in. Let me see if I can put that. It's been brutal. I hope we're close to the bottom. Absolutely. I mean, I feel the same. I would hope we are, but then again, personally, I think we haven't seen the worst of it yet, because, I mean, again, I don't know which country you're watching in, but in Europe and in my part in the Baltics, I mean, the system has been almost artificially kept alive with subsidies, with support, with so many measures from the government, which are just not sustainable. We're already seeing them starting to run out of financial aid. Basically, they don't have money to give anymore, so they continue to print, and obviously we know the more they print, the worse inflation gets. And that's been the recipe in the past. Just keep on printing. I mean, I believe in 2020 and 21 they printed 40% of all the money in circulation in the previous historic of US. So that just shows you they keep on printing, and the more they print, the higher inflation gets. So to counter that, they're going to have to raise the interest rate. So it's sort of these countermeasures, and yeah, nobody knows the answer. I just continue to say the same, dollar cost average. If you want to play it safe, get into the S&P 500, you can see it's probably dropped much less than some of the individual stocks or even cryptocurrencies. If you have a more higher risk appetite, then definitely go with some cryptos, ideally into Bitcoin, because I think still of all those volatile crypto assets is the most stable one to be in. So yeah, that's what I'll continue doing. Right, guys, so I don't see any other questions. If you do, please pop them in the comments later on. I always answer to all of them. As always, thank you so much for watching. Really appreciate you. If you haven't yet, please give it a like, subscribe.